Creamer Media's Mining Weekly is interviewing Johan Odendaal, the CEO of Southern Palladium, the Sydney and Johannesburg-listed platinum group metals company that has just released an optimized pre-feasibility study for the Bengwenyama Platinum Group Metals project in South Africa's Limpopo province. Hi, Johan. It's great to chat to you once again. What are the takeaways of the optimized pre-feasibility study and the phased development strategy?
Back in 2024, we basically completed our drilling program and then produced a pre-feasibility study. Now, that feasibility study specifically demonstrated to us that we can establish a Tier 1 project on the property, and that was basically just on the UG2, just on one farm, which gave us a life of close to 30 years. The next step was then to look how we can align the base case to the funding options available to us. And the board earlier this week decided on the stage project, and it basically entails stage 1 where production will start at around about 100,000 tons per month and for more or less 4 to 5 years, and then step up to 200,000 tons per month. Now, what this does is basically significantly reducing our peak funding requirement to as much as $279 million US dollars, or 38% lower than our previous PFS. And you can see the huge benefit that it then brings to us, not only for us as a junior, but also I think making it much, much more attractive for financiers and also investors out there. And the beauty of it is that we can fund the second stage of this project through the cash flow that will then be generated by the stage 1 project. So absolutely, I think, came together quite nicely for us. If we look at just the NPVs, how that compares to the previous PFS, very, very favorable. We came out with an NPV of close to 900 million US dollar. And also very important to note is that we've done this optimized PFS at the prices that we used in the PFS for comparable purposes. And the prices in the PFS is basically 7% lower than the basket price that we are currently sitting at. So you can see it was an absolute conservative approach to this project. A fantastic NPV, IRR for the full stage 1, stage 2 project sitting at 26% IRR in real terms. The cost side as well, very, very important for us, is that we're still sitting there at the lower end of the cost curve. So all in all, I think this project now makes so much more sense for us to stage it. And by doing that, we will further de-risk the project through this first stage. We improve our knowledge on the geology and on our technical assumptions. And then through the process also, of course, optimize our design. I think also the fact that we are in partnership with a community and there is community nearby, I think it ensures community readiness as well for us by doing it in this stage process.
And can you give us some insight into your planning regarding the definitive feasibility study work program?
Martin, we already kicked off with a definitive earlier this year, and some of the parts that we wanted to do in the DFS. Of course, we were busy during the first quarter and most of the second half still with this optimized PFS. It didn't interfere with the DFS that we already kicked off, but the DFS will basically carry on for the remainder of years this year and probably within the early 2026. And what we need to do is specifically at this moment focus on the metallurgical side. We have done some pitting. We completed that already for the DFS for met assays. And we still need to do a bit of drilling, and we had already engaged a drilling contractor who will start fairly soon to do a bit more drilling specifically for the met assays. And those are more detailed met assays than those that we've done during the PFS. And then, of course, more detailed geotechnical drilling. And the focus will now move towards this area that we will enter. And what we have done, the original plan was also to access the ore body via 2 declines. And this has now been reduced by looking at just the south decline, and hence we concentrate the drilling and we concentrate the focus now on this area. And that is what brought about all these capital savings, not only on the feasibility side, but also, of course, the fact that initially we will only open up with access in 1 decline. And that decline specifically also, of course, give us early access. That's why the decision was made to go with that 1 decline, early access. And we also have an accelerated development plan in that specific decline, which will give us quite a steep ramp up to our required tons and production.
And what are the broader implications for investors, the platinum group metals market, and the South African economy?
Martin, look, this project, I think overall from an investor side, I think we've now already shown through the process that we deliver on what we've said. And throughout the process, in terms of our exploration program, we managed to bring in the exploration and deliver that PFS with 2/3 spent of our budget. So that actually helped us into this area. So I think in terms of where we are now and what we're seeing, it's a project that's now really coming to the fore, and also a project that we can demonstrate it both through the PFS and this optimized study, that it's certainly a prime project. It's a project that's up there with the best projects in the area. And not only now have we managed to significantly reduce that capital, and I think that's the important thing for us, is that with $279 million, it just makes so much more sense that we can develop this project. I think also the other important aspect is the fact that this is probably the last real estate in a shallow area of the Eastern Limb, and certainly also on the Western Limb.
That was Creamer Media's Mining Weekly, speaking to Johan Odendaal, the CEO of Southern Palladium, the Sydney and Johannesburg-listed platinum group metals company that is progressing extremely well with its new Bengwenyama Platinum Group Metals project in South Africa's Limpopo province.